Hello and welcome to my channel. Today we are going to discuss about firm accounting, a new unit under financial accounting. In this video we are going to cover what's the meaning of forming activities, what is meant by firm accounting, objectives and features of firm accounting, and kinds of firm transactions. So in our country, nearly 70% of the people depend on agriculture for their livelihood. So the farming activities may be either agriculture, where we produce crops like maize or paddy or cotton or any other kind of crop. So such activities are called as agricultural activities. We can also farming activities also include horticulture, where the farmers produce vegetables and flowers. It includes pisciculture, where fishes are reared, and it includes sericulture, where silkworms are reared for producing the silk. It also includes dairy farming, where milk and milk products are sold for profit. And it includes poultry farming, where chicken and eggs are sold. And lastly, it includes livestock rearing, or we can say that cattle rearing, where sheep, horse, goats or pigs are reared for commercial purposes. So all these activities are called as farming activities, and 70% of the people of our country depend upon these types of farming activities. Now let's look at what is meant by firm accounting. As you know, the farmers are usually illiterate in our country. They do not maintain the accurate accounts of financial transactions of the agricultural operations. So what happens? They will be not in a position to find out how much profit they have made. So farm accounts help those farmers in finding out the results of farming activities, or in finding out how much profit we have earned. The main objective to keep a record of these farming activity is to ascertain the cost and profit or loss of these different activities. So when we apply the principles of accounting to those farming activities, it is called as farm accounting. So farm accounting means application of accounting principles and techniques to farming, which constitute the activities such as agriculture, farming, dairy farming or poultry farming. So when we apply the principles and techniques of accounting to farming, it is called as farm accounting. It is simply, we can say that application of accounting principles and techniques to the farming is called as farm accounting, or simply maintaining the accounts of farming activities is called as farm accounting. The main objective of farm accounting is to ascertain the true cost. So how much cost is incurred in each and every activity will be easy by maintaining these different accounts. The next point is to ascertain the profit of all these activities. So by finding out the cost and by maintaining these accounts, we are in a position to easily find out how much profit is made by each and every activity. To obtain agricultural loan. So for getting the loans, we need some documents, we need some proofs to assure the banks or the cooperative societies to grant the loan. So these accounts works as a proof to these banks for providing the agricultural loan. The next point is to enable comparison of performance. By maintaining these accounts, we can find out how much cost is incurred, and we can find out whether profit or loss is made by any particular activity. And by maintaining those accounts, we can compare the profitability of one activity with other activity, and we can also compare the performance of one farmer with the other farmer. The next point is to take proper decision and control. So by maintaining these accounts, what we do, we are going to find out the different costs and profits or losses made by one particular activity. Then it will be a tool for the farmers for taking proper decision, to find out where there is a loophole, to find out which activity is not making profit. Like there may be one or two farming activities. One farmer may be involved in more than two activities. So he may be doing agriculture as well as he may be involved in a pisciculture or sericulture also. So to find out these the cost incurred and the profitability of these activities, and to find out the loopholes about where or which activity is not running under profit, then we help the farmers in taking the proper decision whether to carry on those activities or to stop them. The last point is to provide the true financial position. By finding out the profit profits or the losses made by these activities, we are going to show the true financial position, whether one particular farming activity is running under profits or making losses, or what is the situation of one farming activity. That will be revealed by preparing these accounts. We are going to prepare different uh, accounts like crop and corn account, we prepare cattle account, we prepare poultry account, we prepare fish account, we also prepare livestock account. By maintaining these accounts, and at the end of the year by preparing the farming, trading and profit and loss account and balance sheet, we are going to show the true financial position of these farming activities. So these are some of the objectives of maintaining farm accounts. Now let's see some features of farm accounting. So first point is use of self-generated asset. In farming activities, what happens? The farmer use their own assets. There is no separation between farming activities and household activities. So the assets which are used in farming are maintained by the farm household, and it is very difficult to ascertain their proper value and depreciation on these assets. So this loophole will be there. And the next point is no separate bank account. Farming being a family business, the activities of family business and the activities of family itself are mixed up. For the entire family, only one account will be there in which they maintain family transactions as well as the farming transaction. That's why it is very difficult to segregate between the family and the business. The next point is difficulty in applying cost concept. According to this concept, fixed assets are valued on the basis of either purchase price or generation cost. So what happens? Calculation of application of the costing concept will be difficult. The next point is family members put their labor. So generally what happens? The members of the family of the farmer, they also work in the field. They also help the farmer in carrying out these activities. Like they can help in sowing the seeds. They can help in at the time of harvesting. They help the farmer at the time of selling those products. So family members also help they also give their own contribution. So along with the outside workers, they also work with them in the farms. So in such cases, it is difficult to ascertain the current or exact cost of production and the profit. It will be very difficult to segregate how much wages we have given to the outside workers and how much labor is put by the family members themselves. So this is one of the feature of firm activities and firm accounting. The next point is dominance of barter transaction. As you know, barter transaction is nothing but giving or exchanging the goods for another goods. Instead of money, we exchange goods with the goods. It was seen that in farming transaction, it is very much characterized by the farming transaction. In some cases, agricultural product is handed over to the worker in exchange for his labor. For the workers who have worked in our field, instead of giving cash to them, we just give the product which we have produced. Like it may be maize, it may be paddy, it may be cotton, it may be any other product which we have grown. So instead of giving cash, we give it in some kind, or we give some product instead of cash. So the value of such output should be calculated in terms of money and duly adjusted, and in treating the value of wages. So in finding out the value of wages given to the labor and finding out how the output given to these workers, so it becomes very difficult in farm activities. That's why in converting them into monetary terms become necessary. The next point is problem of proper valuation. Proper records are not maintained in farming activities. Like farmers are usually illiterate. They don't know much about accounting. So it is difficult for the valuation of stock, livestock, or it may be any other stock relating to those farming activities. So there will be a rough detail about those activities or those values which were incurred in the production or which were incurred during the during carrying out these farming activities. So what happens, valuation of these different items becomes very difficult. Apportionment of joint cost, for example, we can say that a particular land is there which is used for cattle breeding as well as for poultry farming. Then what happens, the land is used for poultry farming as well as cattle breeding, then we cannot segregate the cost incurred for those lands for poultry farming and for cattle breeding. So it becomes very difficult to apportion these joint costs. So as you know, farmers are involved in various types of activities. They are, and they manage different types of farming activity. In such cases, what happens? Cost incurred jointly. So such joint costs are distributed on the basis of some reasonable rate of apportionment in order to prepare the separate agricultural account or different farming accounts. So apportionment of these joint costs become very difficult. The next point is consumption of farm product. The farmers and the members of this family, they also consume those products produced or the products grown, like they use the paddy grown in their own lands for their own purpose, their own food purpose. They may use the cotton produced for their own household purpose. They can also use any other agricultural product produced for their own purpose. So then what happens, the valuation of those uh, goods used for household purpose become necessary. The next point is valuation of inventory. Valuation of farm inventory is a difficult task because valuation of the standing crop which is there in the field and which is not yet sure that we will get that crop harvested. So it may be prone to some calamities. There may be any floods or there may be droughts which result in destruction of those standing crops. Then at that time what happens, inventory valuation becomes difficult. We cannot take into account those standing crops. So it becomes very difficult for evaluating the inventory. The next point is farming activities affected by the calamities. The farming activities are always affected by the natural calamities such as flood, earthquake, fire, theft, etc. So it is usually said that agriculture in India is gambling with monsoon because we don't know whether it will rain or not, or due to the recent climate changes, due to climatical hazards, what happens, there are some, in some areas there will be some huge amount of rainfall and in some areas there will be drought. So because of this kind of situation, climatical situation and phenomena, what happens, farming activities are very much at risk and farming activities are affected by these calamities. So at the time of these calamities and whatever destruction has happened, we need to maintain all those accounts, and these are some of the features of farm accounting. The next point is kinds of farm transactions. Farm transactions are classified into four classes. They are cash transactions, credit transactions, exchange transactions, and notional transactions. So cash transactions are nothing but the receipt and payment of cash. We pay cash for whatever purchases we have done or whatever we have sold. But when it is based on credit, that is payment and receipts are agreed to be paid in a future or future period of time. So we don't get cash paid or we don't pay the cash at the time of delivery of any particular product. So we agree to pay those amounts in future period. That's what called as credit transactions. Third one is exchange transaction. It can also be called as barter transaction. Exchange transactions are those transactions where, to facilitate with each other, the exchange of goods or services takes place between the parties of another kind of goods and services. So you exchange good for good. So it is also called as barter system. The last one is notional transactions. The transactions made between the firms and the households are called as notional transaction. There will be no transaction. Actually, there will be no cash outflow or cash inflow. They are the transaction between the farm and the household. For example, supply of food by the farm to the household, or the crop used by the household or the house or by the farmer, and consumption of farm output by the farmer, or use of household capital, use of land owned by the farmer. So such kind of transactions are called as the notional transactions. So these are some of the theoretical parts of farming transactions or farming activities. and form accounting. In the next session, we are going to discuss about the different types of accounts and their formats, which we prepare for different farming activities like agriculture, horticulture, dairy farming, poultry farming, sericulture, or livestock farming. So in the next session, we are going to discuss about those remaining theoretical parts. Thank you so much for listening. Care.